Hello, everybody. My name is Brett Pattison. I am a portfolio manager and investment advisor at Iron Gate Global Advisors, and I thank you for taking a few minutes of your time to become more educated on the markets, to gain some clarity, and to discuss something very important, which you see in front of your screen, the global fireworks which are taking place. And speaking of fireworks, I hope everybody had a fun and safe 4th of July. We are in the midst of what they call in the stock market or the markets, the summer doldrums. And I'll talk more about that here in a moment. As I predicted in the June market commentary video, which many of you listened to, we would not see a great month. And that's exactly what's happened. We didn't see a great month. And there's global fireworks, and what should investors do? And that's exactly what we're going to talk about today. Our agenda lays out like this. As we always do, we'll talk about the month before, in this case June, and we'll hit year-to-date returns, and there's lots of changes to those returns based on what we saw last month. We'll also talk about global fireworks and the dumpster fire known as Greece, which I'm sure a lot of you want to talk about and gain clarity on, and we'll talk about how to approach the chaos to that Greece dumpster fire, how we're approaching it with our clients, and also we'll talk about new services, which I'm very excited about, that are coming to Iron Gate Global Advisors. Our goal is to become the one-stop shop for investors where they can find everything they need, and I think we're becoming closer and closer to accomplishing that goal. So we'll talk about new services that are coming soon for our clients. And those of you that are not clients, I hope this will help gain some more clarity on what Iron Gate Global Advisors can do for you. So let's talk about June for a moment. And I've got this big bear on the screen because that's the mentality right now. As I pointed out in the June video, here's the exact slide that I used a month ago. And I used this, it's not that we were trying to call a top in the market. It's not that we're these brilliant forecasters. It's because we understand history and we know what typically happens in certain months. And it just happens. It's repetitive. It's cyclical. And we talked about the markets turning negative in June, which is exactly what happened. We talked a little bit about the rate decision, although that wasn't headline news. That was more Greece. But certainly we got it right. And we positioned portfolios in a way to take advantage of it in small measure. And I can't get into detail, exactly how we do that. Certainly I can on a one-on-one basis, but not in a video open to the public as a whole. But certainly I would love to talk to you individually on how we position portfolios as the market turns negative and how we take advantage of that. Some of which we'll talk about in the video on a high level. All right, so let's talk about the month of June. As far as the global markets, the S&P 500, which is the U.S., was down 2.7% in June. Not good. Typically, June is down around 0.5%, and it was a little bit worse than normal, but we know that normally it's down, right? So that's how we're positioning portfolios. The developed non-U.S. markets was hit pretty hard, and it was down 4.47%, while the emerging markets were down 3.27%. We're also hit pretty hard, namely China, which we can't get into in this video, but I will address in a upcoming blog, so look for that. All right. So how did those June returns affect our year-to-date returns? And you can see there highlighted the developed non-U.S., which was the worst performer of June because of that dumpster fire, known as Greece. But let's take a look at the 2015 returns. You can see the U.S. is slightly positive on the year, 0.55%. By the way, these returns are as of today, July 6th. So those are past June. That includes the sell-off last week and today as well. So we've got 0.55 for the U.S. The developed non-U.S. is still leading. That's up 3.29% on the year, while the emerging markets have turned negative, are down 1.43% on the year. So those are the global markets. We also know this, folks, as we understand history. We expected this to happen. We expected June to be kind of a bummer month, right? Just from history. So it's important that you put everything in perspective. It's important that you understand the past to help put everything in perspective for what's happening right now, and we will do that as we continue in this video. Now let's take a look at the sectors. June return, just a couple. I'm not going to point out every one, but just a couple of the sectors, and that is consumer discretionary, lost the least for the month of June. Utilities was absolutely smashed in the month of June, and that's a interest rate sensitive sector, and was just not obliterated, but pretty smashed in June. Year-to-date returns look like this, and that is healthcare is leading the way, and utilities is lagging, down 10%. Now, as far as healthcare goes, those clients that are listening to this know what I'm about to speak to, but we are overweight healthcare. In fact, our biggest position across our portfolios, the stock that we're the most bullish on, and have been for some time, it's up almost 58% this year so far, and that's in the healthcare sector. So we've positioned our portfolios in a way to take advantage of healthcare, and it's happening, and our clients are seeing it. And the other returns in the healthcare sector, certainly 5%, 9% across our holdings. So they're doing relatively well, although we don't have all our money in healthcare, and we wouldn't have all our money in healthcare, but certainly overweight. All right? So that's the June sector recap. And a couple things along this line is, and a note on current market trends. In fact, I know many of you look at charts quite often. You are technicians is what it's called. So I'm going to bring up a few charts, and the charts are of the major global markets. And this is just to set your mind at ease. And I say relax because the trends are still in place. And I'll show you what I mean. The United States, you can see on your screen, I've got 2 moving averages there. I've got a 10 exponential moving average and a 40 simple moving average. When those cross, we get a little bit worried. They are not near crossing. In fact, you can see on the right edge of this, where my little cursor is, that we're pulling back down, which is typically, it's been a great time to buy as the price pulls down to that 40-period moving average, right? So there's the United States, certainly still bullish. So relax, those bears out there. The developed non-U.S., which would include Europe and Asia, also bullish still. In fact, looking to be at a nice support level. If you are looking at levels of areas of support and resistance, certainly that looks good too. Higher highs, higher lows. And then you've got the emerging markets, which is always kind of sloppy, especially the last 5 years, but continues to make higher lows. And could be in what you could call a consolidation, but more of a bullish consolidation than bearish. And so we're still positive on the global markets. And something that I would point out that's very important in determining whether a bull market is over is there's a quote from an investor that I have a ton of respect for, probably as much respect as any investor out there, and that's Sir John Templeton. And he said this, and I've used this before, and I've said it many, many times. But it's so true, it rings true, and it helps, again, put your mind at ease. They're words of wisdom, as I call them. And that is, he said this, bull markets are born on pessimism, they grow on skepticism, they mature on optimism, and they die on euphoria. And if you think of the bull market that we're currently in, I don't know if we could be in optimism, but, we may not even be there. Certainly we're not at euphoria. Euphoria would be when everybody in the world, including the individual at the grocery store bagging your groceries, is talking about the stock market. And that hasn't happened and isn't happening. So I think just according to Sir John Templeton, according to the charts, according to the fundamentals and the growth of the economy, I'm still very positive on the markets as a whole. So relax. And in fact, we will be sending quarterly statements to our clients in the next week. And the one thing we will tell them in those quarterly statements, and something I would tell any investor out there, is first, relax. Second, don't get caught up into 1-month returns or 3-month returns or even yearly returns. We invest, and most investors, at least when it works over periods of time, right? Which is what investing is, longer periods of time. Our focus is 2, 3, 4, 5 years out. And if you need money in the next 2 years, if you're dying to have money in the next 2 years, well, then maybe you should be putting that more in cash and in money markets and not investing that for the next 2 to 3 to 4 to 5 years. But that's our mentality, and it's worked since our firm was created in 1999, and certainly history has proven that it's worked over time. So there's your words of wisdom.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.